Welcome back. Daljeet Singh Kohli also with us this afternoon. Markets are looking strong right now. IndusInd Bank, Reliance, some of the broader market names also very much intact. Reliance, in fact, up 3% today. That deal getting a go-ahead. The Bajaj twins are once again moving, and IndusInd is up an 8%. So Daljeet, good afternoon. Let's start off with that because IndusInd has just been up and away, even in the in the last week or the last few weeks gone by. We've just seen it gather momentum, and while private banks are now back in focus, this one seems to be leading the way, along with possibly a Kotak as well, not in today's session but otherwise.
Yeah, good afternoon. I think the movement in IndusInd Bank is more to do with it's the clearest beneficiary of what the working group has suggested yesterday night. So for all other things, probably we will have to wait for changes in regulation, and there could be many ideological differences within the Board of Governors for RBI and all of that. But probably on this issue that promoters holding can go up to 26%, especially in the view that Kotak has already got that. This probably seems to be a sure shot kind of thing. So market is accepting that IndusInd Bank promoters will also get this permission, and therefore the stock is moving that way. Otherwise, also if we see, this was the bank which was most beaten down. From at one point of time 1900, it came down to almost 300 odds. So therefore the recovery will obviously be much more sharper in the guy which has been most beaten down. However, as a disclosure, in our portfolio we are not holding IndusInd Bank, and we have still not turned positive on it, mainly because the issues on the asset quality, they are improving, but we will have to wait for some more time. So we would rather go with the leaders in the pack, which would be HDFC Bank. In fact, we have initiated a call on Bajaj Finance in Murat picks, not on the banks still, but only on NBFC, which is Bajaj Finance. We are going by the leader, and we believe that probably their asset quality and recovery will be much better than all others.
Gland Pharma is also having a good day. Post the listing, another 16% higher on Gland. So that's one's looking pretty good today. Walkout from the pharma space also up about 10-11%. DRL, so just some of those pharma majors there. We've got a PVR up 4%. Motherson's looking good post its plans for the next 5 years that it's outlined. Reliance, as I mentioned, 3%. Kunal, should we get a check on RIL on the charts today? It's looking really strong.
Looking quite strong, Abha, and I think this, consistent buying, which comes from, 1850 levels for Reliance Industries, I think just about gives you, a feeling that this is now, becoming a strong support zone for the stock, and there's a lot of demand, which is quite visible from for the stock from those levels. So I think this now acts as a very strong support. So in the morning when I was discussing about RIL, I mentioned that the behavior around this 1850 mark is something which is very important to take note of, because this could characterize whether this is just a short-term buying which is happening, or there's a genuine demand for the stock at those kind of levels. So I think after today's rally, even though there's no follow through, ideally one should have seen a good follow through price action, because the stock opened up 3% higher. There was a bit of an intraday choppiness, and the stock is back at 3% high kind of level. So I think if the stock sees a follow through over the next couple of days, then you can probably be more sure about that 1850 support being a very strong support level. But nevertheless, I think the fact that the stock is making a comeback again at a time when the market needs its large cap names to perform, I think is also a standout feature. So I, for one, believe that this 1850 mark is a very, very crucial support for Reliance Industries until the time the stock is trading above it. I think the risk reward could probably favor in for opening up more long positions over there.
Okay, that's on RIL then. In today's session, IDFC First Bank is up 10-11%. That's another interesting one from the broader market there. And we've constantly seen names like Adani Green moving, Shriram Transport, a couple of these momentum names. What about cement, Daljeet? What's your view on cement? ACC is looking good today, but it's the larger theme that we're focused on in terms of the revival and rotation and the kind of valuations we're seeing there currently. What would be your preferred names in the cement basket?
We have a positive view on the sector. If we go by the numbers for quarter two, I think all of them have shown very good set of numbers. In fact, most of them have surprised on the positive side. And it is across the regions. It's not just one particular region doing well or another particular region. So which means that it's across the board. The good part was that in this period, they've got the double benefit. One, that the prices were either holding or they were able to increase a little bit. And on the saving side, they were able to save a lot of that. So which helped in EBITDA per ton growing at a very large scale. Now, whether this will continue or not, that is a debatable thing. We will have to wait for quarter three numbers to see whether this same kind of EBITDA per ton can continue. But overall, the sentiment is positive. The demand scenario seems positive, mainly because all the push that is coming from the government side is also on infrastructure. So while housing demand may have not picked up too much, but infrastructure demand is picking up, and there is a hope that if government wants to revive economy, that will be the first area. Infrastructure will be the first area to push for. So I think that it's building up all of that. Now, in terms of stock prices, most of the stocks have already moved very sharply. So they leave very little room for further appreciation. Therefore, one has to be cautious of the valuation part. A lot of catch-up has already been done. And these are all cyclical stocks. So when they correct, they give a lot of room on the downside. So one has to be cautious of that. That's why we are not buying as of now. But we have a positive view, and we'll probably look for a good entry point. On the preference side, I think Shri Cement is the most preferred one. ACC, Ultratech are the next in line. And amongst the smaller ones, Dalmia Bharat seems to be good. Disclosure that we are not holding any of these stocks, but we are looking at them as positive.
Welcome back. Well, we're looking good, really just about at 13,000, and overall technicals also holding strong. Remember, it's expiry week as well. A lot of action anticipated ahead of that. We've got a whole host of stocks that are looking good. We've been talking about IndusInd and a couple of the other movers there. Let me also bring up an ONGC. Just want to check on that one and see whether we're actually seeing that sharp move coming in there. But IndusInd for sure. We've got IDFC first. That's another one that's moving really well. The BSE Energy Index is looking strong today. So a couple of the pockets where perhaps we're seeing a lot of attention building up in trade. Daljeet, there's been such a push on the entire privatization, divestment drive for PSU units, PSB, so on and so forth. I mean, as always, it's still a while before we have any clarity on that. But do you think that some of the attempts to focus in that direction could also drive more interest towards stocks in that space?
I think that is happening in two obvious names, Concor and BPCL. Most people are playing for that only. So probably I think both the stocks, they behave more on the news, less on the fundamentals. Most people who are trading in them probably don't even are aware of what kind of fundamentals these companies have. So market is factoring in that there is some push, and people are extrapolating that to other sectors also and other stocks also, which I think is a little bit exaggerated, because in our country we have not seen in last many years things move in such an efficient and so fast manner. It takes very long time to disinvest or privatize a government company. This is the first attempt they are doing for a profit-making big company like BPCL to go for divestment, and we have seen how much challenges they have been facing for last almost 6-7 months. Now, this will be a good case to see how it works for future divestments and what would be the thought process from the government. It's more like kind of a trading play, less of an investment play. So we would rather, that's why we have not recommended anything on this part to our clients. We rather would want to go with the pure fundamentals and play on the investment part rather than things which are more on the news-driven part.
Daljeet, what are you making of the move on ONGC today? 5-6% on an ONGC. I mean, we've been watching the trajectory on crude, but what else could be driving interest higher there?
I think same view on ONGC. We never liked that stock because it has been a huge underperformer for many, many years. Some of it because of its own inefficiencies, some of it because of the government holding. Energy as such, oil sector as such is not likely to perform well. Yes, because of this unlocked trade, crude might see some price movement upwards. But we have usually seen that it does any upward movement in crude or downward movement doesn't really flow directly into the profitability of ONGC, mainly because there are a lot of hurdles in between because of the policies from the government. So I think if somebody is playing because crude has gone up by 5, 7, 10%, and it may go further up on unlock, but so we should play ONGC. I don't think that's a good idea. It has not performed well in the past so many years, and overall our view also on this sector as such is not very positive. We play Reliance, that is our top pick, but that is on the basis of other diversifications that they have, not on the energy front.
All right, stay on with us, Daljeet. Lots more to talk about. Motherson Sumi clearly is one of the stocks of the day, and you did have a virtual analyst meet that took place where the company detailed their vision 2025 with the market fraternity, and this is something that ET now told you well in advance. Here are the chairman of the company, Vivek Chand Sehgal, talking about how they plan to achieve this vision.
We are already the 21st largest auto component manufacturer in the world today, with God's grace. If we touched 18 billion, we would have probably come in the top 15, top 14 companies in the world. So there was a need for us to actually come out with something new, which could actually be working together with the automotive. So we, in the last 5-year plan, we put a lot of attention towards these 4 verticals, which is, the medical devices. We are looking very strongly at logistics. We're looking at a lot of focus on aerospace. And why we are looking at these particular things, software and security, is basically because we have all the ingredients already within our companies and plants at the moment. So it's a very easy way to diversify this. It is not something that we are taking a bet or something like that. Existing competencies and capabilities are already available with the group in form of physical form. So virtually no extra capex is required or new technology is required. But of course, there are a lot of companies which we are already working with, which are non-automotive, for example, in the medical side and all that. These companies absolutely love Motherson because we have the complete wherewithal to deliver to them. So, we've taken these 4 particular verticals and given them a very ambitious target. We've got some young kids who are there over there, well, young as far as I'm concerned, but young kids who are there who are very, very, raring to go. So very good way of putting out our new target in front of everybody.
All right, talking about how their ambitious vision for 2025 can potentially be achieved. That's Motherson Sumi for you. Let's get a move on then and focus in on the GST Law Committee, as the Finance Ministry sources seem to suggest that steps are going to be taken, a 2-pronged strategy to be more specific, to tackle fake invoices. My colleague Ruchi Bhatia on top of that story now joins in with the latest updates. Ruchi, fill us in.
A nationwide drive is currently underway to curb fake invoices. This has become a big menace, and in a bid to control that, the GST Law Committee held an urgent meeting last week. This, of course, also coming in light of the weak GST collections as well. Now, we're given to understand that GST Law Committee has identified as many as 6 lakh dormant GST registrations, and they seek an urgent need to make modifications in the GST rules to curb the fake invoice. Having said that, we're given to understand these suggestions will now be made to states as well as the GST Council. The GST Law Committee has suggested systemic changes, the modification to the registration process as well as use of Aadhaar as well to curb fake invoices. They have suggested that fresh registrations in GST should adopt an Aadhaar-like registration process, and fresh registrants must also submit a reliability recommendation as well by at least 2 taxpayers. Besides that, for existing GST dealers, we're given to understand that some of these risky dealers will be identified through business intelligence and fraud analytics tools. Once they are identified, their precise identification is made, then these dealers will be asked to pay at least 2% of their tax dues through bank guarantees and suspension of some of these risky dealers. Their GST registrations will also be put into place. Having said that, this is a big menace that the government currently is dealing with, and various suggestions have been made by the GST Law Committee.
Okay, let's also welcome on board then Naresh Mirani and talk about where he sees the market texture right now. Naresh, hi, afternoon, going steady, 12,950 for the better part of today's trading session, and a good comeback, Naresh, by IT and Pharma sectors both. Where within IT and Pharma are you spotting trades?
So in terms of the Nifty, we are still struggling around the 12,950 mark, but we are seeing a sector rotation in terms of IT and Pharma. The stocks which have really broken out very cleanly is Wipro, which has a resistance around 349 to 350 zones, but clearly broken out, so it could go back to 370 to 380 zones. So that's the first one. Second one is Infosys, which is on verge of a triangle breakout about 1135, 1140, where it has been sustaining right now. So that could be going back to 1200 or higher levels. So we are seeing a rotation in terms of the movement, and also we are seeing a rotation in the same way like PSU stocks have been seeing a big rotation. So ONGC has broken out, GAIL has broken out. So we are seeing, say, even though the lot of large caps like HDFC Limited, ICICI Bank are down, we are seeing a good shift in terms of rotation. So we may be looking towards IT, Pharma. We'll be watching out for, say, Dr. Reddy's and Cipla also going forward.
Naresh, the other stock which is also comforting the index today is Reliance. After 3 weeks of underperformance, it's finally made a comeback, and after 6 weeks of underperforming the Nifty itself, 3% higher on Reliance. Do you sense there could be a material move from here too?
So in Reliance, the view remains the same. Like we've gone into a pause after a big move since the breakout at 1650. So for example, when we bounced back from the recent lows at 1830, we had a lot of resistance around 2080, 2100 mark, and we started dipping back from it. So that tells you that any strong moves, we need to see a sustained close about 2100 to change the view from being a pause to momentum. So for now, we've made a small pullback from this zones, again go back to 2000, 2050 levels, and then again pause. So in terms of leadership, Reliance for now has taken a pause after being a leader for a really long time. So no further, say, trades in this. This is a time to look out for the next sector rotation.
Okay, on that note, I'm going to take a very quick break. But before that, Daljeet, great to have you on the show. Thanks as always for taking the time out. Naresh, you stay with us. We'll be right back with you after this short break.